What if I told you there's a way to live in your home, access its value, never make another mortgage payment, and still pass wealth to your kids? Sounds too good to be true, right? Well, it's not. It's called a reverse mortgage. And today I'm going to share with you 7 powerful strategies that proves why reverse mortgages can be one of the smartest financial tools for Canadians 55 years or older. What is a reverse mortgage? A reverse mortgage is available if you're 55 or older and own your home. Unlike the traditional mortgage, your income and credit score don't weigh heavily on qualification. And there's the best part, you don't make monthly mortgage payments. Instead, the loan is paid back when you sell your home, move out, or your estate settles things later. It's a way to unlock the value of your home while still living in it. It can be used in many different ways. So, let's dive into the 7 strategies. Each one is designed to solve a different retirement challenge. Strategy number 1, the 100K retirement hack. It bridges to bigger CPP and OAS. Would you rather settle for a smaller pension now or unlock a much bigger one later? If you delay CPP to age 70, your mortgage payment grows by 42% more than at 60 years of age. If you delay OAS to year 70, it's 36% more. That's a massive increase. It's inflation protected for life. But the challenge, you still need money to live in the meantime. Here's our solution: use a reverse mortgage to bridge the gap. Tap your home equity from age 60 to 70. Keep your investments intact. Access tax free cash flow that doesn't trigger OAS clawback. As an example, start early. If you have 1,353 per month at age 60, then imagine delaying it to age 70, it'll be $2,390 a month. That's an extra $1,000 a month for life. It's best for healthy retirees who want guaranteed income for the long run. Strategy number 2, what if you could move into a smaller home but keep your old one paying you? Here's how: buy a new home to downsize into, keep the current home as a rental property. Use a reverse mortgage to unlock equity for the purchase. Advantages of this: more monthly income, you collect rent and tax free reverse mortgage cash. Two properties, two chances for appreciation. You have tax write offs, mortgage interest, repairs, property taxes. You can write those off. There's flexibility. Live in a home that fits your needs without losing your investments. It's like creating your own retirement pension powered by real estate. Let's review this example. Let's say you've got a $2 million property today. If we give you a reverse mortgage for $750,000 at 6.59%, and let's assume that you bought that downsized property equivalent to that $750,000. Now, the ending balance on the reverse mortgage after in 15 years is your original $750,000 owing plus the interest, which is approximately $1.3 million dollars in 15 years. Now, that seems like a lot, but imagine this: today or in 15 years from now, you will have two properties that appreciates. Let's even if we assume 4% annual interest rate capital appreciation, that's actually very, very conservative. Now, the combined value of those two properties can be basically added to 4.95 million. So your net worth actually increased in 15 years to 3.65 million. Well, what does that give you? One, even though the interest rate seems to be high at 6.59% today, the actual marginal tax rate of 43%, your effective rate will only be 3.76% because you're able to write off that reverse mortgage interest rate because we used it to go acquire an investment property. Okay. Still, you're collecting rental income month to month out of that property that you are renting out without any mortgage payment. So you've been able to increase your capital valuation on those two properties and receive rental income that basically affects your cash flow. Strategy number three, freedom to downsize even with bad credit or low income. Not everyone has a perfect financial story. Maybe you've had bad credit or limited income before. That doesn't matter here. You can sell your home, use part of that proceeds for a down payment on a smaller property, refinance the rest with a reverse mortgage. The benefit, no credit checks or income requirements. Well, there's some credit check, but it does, we don't lean on it. Approval is based on your age and home equity. No monthly payments required. That's great for your cash flow. Funds are tax free as opposed to if you use your investments and cashing those, so they don't affect your benefits like OAS or GIS. It's a great option if you want a home that's easier to maintain, even if your financial past isn't perfect. Strategy number four, retire the debt, not the dream. Imagine retiring without the burden of credit cards, loans, or even a mortgage. With a reverse mortgage, you can pay off existing debts like mortgages, HELOCs, credit cards, and personal loans. Free up hundreds of thousands of dollars in monthly cash flow. Simplify your life. One loan, no required payments until you sell. All of this happens while keeping your home and living stress free. Strategy number five, top it up, write it down. RSPs with a reverse mortgage. So, this one is for financially savvy retirees who still wants to play offense. Use reverse mortgage funds to basically maximize your RSP contribution room. Get a tax deduction, which could mean refund or a lower tax bill. If the money is invested, the interest on the reverse mortgage may be deductible. You're essentially using good debts to grow your wealth while keeping your home ownership of your home. It's a way to turn home equity into smart tax retirement investment. Now, number six, the bank of mom and dad to the rescue. We all know buying a home today is tough for younger generations. Many can't save enough for a down payment. Enter the bank of mom and dad. Use your reverse mortgage to gift your kids a down payment tax free. They can qualify for a mortgage and get into a housing market sooner. You stay in your home with no monthly payments, and here's the emotional win. You get to see your kids and grandkids enjoy your help while you're still alive, not just as an inheritance later. Strategy number seven, buy first, sell later. This is the open reverse mortgage advantage. Sometimes timing is everything. Maybe you found the perfect downsized home, but you haven't sold your current one. With an open reverse mortgage, you can buy your new home before selling your old one, cover renovation costs to prep your current home for sale, borrow short term with no monthly payments, pay it back anytime with no penalties. This gives you flexibility and peace of mind in one of the life's biggest transitions. Why a reverse mortgage matters for us. So, there you have it. We've given you seven powerful strategies that show reverse mortgages aren't just about giving up your home, they're about unlocking your options. Whether you want to boost retirement income, downsize with freedom, wipe out your debts, support your kids, or simply live with more cash flow and less stress, a reverse mortgage can be key. If you're 55 or older, it's time to ask, is your home just a place to live, or is it a financial tool that can give you the retirement you deserve? Let's have a conversation and find out which of these seven strategies could work best for you.